What up, HyperChange? Welcome to another episode. Today we're talking about the one thing I'm looking at heading into Tesla's earnings report. So here we're on mainstreetdata.com/Tesla, looking at the revenue breakdown of Tesla. And as you can see, still like 80 to 90% of their revenue, 19.6 billion last quarter coming from the automotive business, 1.56 billion from energy, another 2 billion from services and other. But in the meantime, while the profit margin from the automotive business has been getting squeezed, we've seen the profit margin from the energy and services business go up dramatically. So this little piece of revenue, which as you can see has been growing nicely, is now actually becoming a profit driver for Tesla. This is a key diversification of them beyond just selling the car business, which can be low margin and cyclical, which we've actually seen in the most recent couple quarters. So last time on the earnings call, Elon Musk did particularly note how the energy, storage, and services and other profit segments have been doing extremely well. And if you zoom in here on just the gross profit of those segments, we can see that it's been almost 500 million just in the last quarter alone. 129 million come from services, 381 million coming from energy and storage. So this has actually become a material piece of the gross profit. That's 2 billion per year in incremental gross profit just from this business. So this is a number that I'm watching super closely heading into Q4. Will this trend continue? I think there's a couple things to keep note of. First is that Supercharger is opening up to a bunch of other cars. Tesla's done so much work to really expand its Supercharger network. I think I might even have a chart of the Supercharger locations here. Here we go. Okay, Supercharger stations, as you can see, have been going up. They have 5.6 thousand, and this is stations. I believe they have like 50,000 stalls. So this massive distributed fleet of sort of gas stations is a totally new business line that makes Tesla not just like the car company, but like the oil company as well. That's why their market cap's so much bigger. Now they've slowly been able to monetize that by opening it up to other people. And we're actually seeing that show up in the profit segment of the services business taking off. So I wonder, as they open up this network, and I know it's just in the early days now, that could be a bigger driver of Tesla's recurring revenue and even out any lumps from the automotive business. Then we go to the energy storage deployed. This has been a huge bright spot, which is batteries, huge batteries to stable the grid, the Megapack. And we're still in the early phases of the Megapack factory ramping. So I think this could get a lot bigger in the years to come, although Elon noted on the conference call that it could be a lumpy business. So and you can see right here, it's super lumpy, like huge project finally gets approved, deployed, all the paperwork, they get paid, and then they get to mark down these energy storage deployments. But this has been growing huge. And if we actually go to an annual figure, you can see just how much the growth has been. Massive growth. The factory's ramping. This is one of Tesla's most profitable products, the Megapack. And if this continues, I think we're going to see really strong energy and storage gross profit. So let's go back to that gross profit segment. And here we can see that it's 500 mil last quarter. Both of these continuing up. This could quickly ramp up into billions per quarter. And now I'm going to zoom it back in with the automotive segment. So you can see still nothing compared to the automotive segment, but when you can consider operating expenses mostly going towards automotive, this incremental money can actually be a real needle mover for Tesla. And it's a sign of the company growing up and maturing in a lot of ways. Gross margin per segment, you can see that energy really hitting its stride recently with 24% gross margin, higher than automotive. So last quarter was the first time where energy margins passed automotive margins like ever, or at least that we can see in the last 5 years. So, and services gross margin in the meantime been steadily creeping up as they get more efficient with service, and they're actually profitable here selling used cars as well as access to that Supercharger fleet. So every margin's going in the right direction except automotive margins you can see are slipping here. So really nice to balance that out with these other business lines. And I've always thought that the energy business has massive potential. So for Elon to be so bullish on it and to us to see in the mid 20s of gross margin here, major power moves for Tesla. I think this is a super like quiet, bright spot of the company and can't wait to check out and can't wait to see it next quarter. Anyway, this is HyperChange. See y'all next time. Peace.